Hey everybody, Felix Stoffelbaker here. Want to make a video because we've seen the collapse of Silicon Valley Bank and the dust has kind of settled and the panic has kind of went away, but there are still some very fascinating aspects to this that people aren't taking into consideration. They may not know, they may not be aware of, but the chief administrative officer, Joseph Gentile, is the chief administrative officer at SVB Securities, Silicon Valley Bank Securities. Prior to joining the firm in 2007, Mr. Gentile served as the CFO for Lehman Brothers Global Investment Bank. That's pretty interesting that connection would be there. There was a joint statement by Treasury, Federal Reserve on March 12th, 2023 by the Board of Governors of the Federal Reserve Deposit Insurance Corporation, Washington, D.C. The following statement was released by the Secretary of the Treasury, Janet Yellen, Federal Reserve Board Chairman Jerome Powell, and FDIC Chairman Martin Gruenberg. Today we are taking decisive actions to protect the U.S. economy by strengthening public confidence in our banking system. This step will ensure that the U.S. banking system continues to perform its vital roles of protecting depositors and providing access to credit to households and businesses in a manner that promotes strong and sustainable economic growth. After receiving a recommendation from the boards of the FDIC and the Federal Reserve and consulting with the President, Janet Yellen approved actions enabling the FDIC to complete its resolution of Silicon Valley Bank, Santa Clara, California, in a manner that fully protects depositors. Depositors will have access to all their money starting Monday, March 13th. No losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayer. And we are also announcing a similar systemic risk exception for Signature Bank, New York, which was closed today by its state chartering authority. All depositors of its institution will be made whole. As resolution of Silicon Valley Bank, no losses will be borne by the taxpayer. Shareholders and certain unsecured debt holders will not be protected. Senior management has also been removed. Any losses to the deposit insurance fund to support uninsured depositors will be recovered by a special assessment on banks as required by law. Finally, the Federal Reserve Board on Sunday announced it will make available additional funding to depository institutions to help assure banks have an ability to meet the need of all their depositors. The U.S. banking system remains resilient and on a solid foundation, in large part due to reforms that we made after the financial crisis that ensured better safeguards for the banking industry. Those reforms, combined with today's actions, demonstrate our commitment to take the necessary steps that depositors' savings remain safe. It says that no money will be borne by the taxpayer, but as soon as they print money and they don't tell you that the depositors are the people being bailed out, those people pay taxes, and those people are having their values devalued through the money printing. So it's only the depositors who are boring the brunt of this. It's a tax. It's a bailout by the taxpayers, by the depositors. And then it even says shareholders and certain unsecured debt holders will not be protected. So they're picking and choosing. They're bailing out the Chinese investors, depositors. They're bailing out the Israelis. They're bailing out everyone except for the little guys. And then they're trying to say, oh, you won't get any brunt of that. Then we've got before the Silicon Valley Bank collapse, executives sold a lot of their shares. Gary Becker, the CEO, or Gregory Becker, sold 11% on February 23rd. Michael Zucker of General Counsel sold 19% on February 5th. Daniel Beck, the CFO, sold 32% on February 27th. Michelle Draper, CMO, sold 25% on February 1st. Then there's other different things where other companies had money invested in there that lost. Roku had 26% of total cash and cash equivalent held in now collapsed Silicon Valley Bank from Bloomberg. As of December, roughly 95% of Silicon Valley's bank's deposits were uninsured through the FDIC from CNBC. Circle of USDC had 3.3 billion of its 40 billion of USDC reserves at Silicon Valley Bank. It said the Silicon Valley Bank has collapsed, the largest bank since 2008. Silicon Valley was the 16th largest bank in the United States, holding $210 billion in assets. Nearly half of all U.S. venture capital-backed startups were involved with Silicon Valley Bank. So it's just a way to literally clamp off all of the innovation and things coming into the tech industry. We saw Peter Thiel was able to get all of his money out right before it collapsed. He pulled like $3 million out. We saw that there was an Israeli startup that was able to get over $1 billion out right before it collapsed. I mean, these are really crazy coincidences. And then the CEO of Silicon Valley Bank, Gregory Becker, was on the board of directors for the Federal Reserve Bank of San Francisco. And you can't make this stuff up. These people all know exactly what's going on. They know exactly what they're doing. They're using this as Operation Choke Point 2.0. They're using it as a way to also consolidate. They're gonna get rid of the FDIC insuredness because they can just print the money and then get you on the hook for a CBDC. You won't have to lose all your money. You'll have to sign a paper that says you give up all your rights, and then you'll get a 1-to-1, maybe a 10-to-1. Maybe they'll give you a huge bonus for signing on to a CBDC that is total surveillance, total slavery, no freedom. And it's all being done in the name of, oh, there's this bank that collapsed because they invested in crypto. And that's not the case. They were invested in a bunch of U.S. treasuries, a bunch of bonds, all these different things. And then they were told that interest rates would stay long for a very long time. And then they got interest rates hiked on them in a rapid fashion by the Fed. They knew that this was going to happen. They planned for this to happen. And then they implemented it exactly how they had planned it to go. So people who think this is all random or this is the fault of people like you and me who are just buying $50 worth of Bitcoin, that's not the case. This is all a pre-planned situation to cut off the on and off ramps of fiat to crypto, and then specifically Bitcoin. And then you got people like Christine Lagarde who says that Bitcoin is the escape valve. You can't even make this stuff up, but people aren't putting that together, and that's what's going to cause them to lose everything because they can't see the bigger picture. They're being told to worry about all these other social issues that if you're sitting there bickering back and forth, you're going to literally miss your freedom opportunity. So I just want to put that out there. Stoffel Banker out.